This is episode 4 of my Trading Concepts course, and today, you better lock in. Things are about to get serious. We're learning session highs and lows. Now, if you watched any of my trade recaps, this is literally what I base my trades on basically, and this is the primary liquidity. And especially for Forex pairs, if you trade Forex, you need to learn about session highs and lows. But like always, I'm going to show how this works on literally every pair. TJR uses this and he has a video on it. And I was thinking like, what's the best way to explain this? And I remember watching his video and it was a pretty good way of explaining session highs and lows, which I'm going to be showing you in this video. Oh, and we also need a website as well. What am I doing? I should just explain session highs and lows first. Alright, so there's 4 main banks, but one of them is Australia, and that has very little liquidity that no one trades it basically. So there's a cool tool called Baby Pips, and you just search their Forex market hours. So you can see right now it's in the morning. Sydney session is open, but you don't trade just the Australia session. You trade the Asia session where the Australia and the Asians overlap, which starts at 9:30, and this converts automatically to your time zone. Or yeah, put your time zone in there. And then for me right now, 6:57 a.m. Asia session is gonna start at 9:30 a.m. And then you can trade it. It's probably good to just trade it for 2 hours. Now, Asia session is also a pretty small bank and doesn't have good liquidity. I used to trade Asia session and it freaking sucked. I remember getting in a trade at 2 p.m. But that was because I didn't really know how to trade and I didn't have any limit on the times I could trade. But yeah, when that stops overlapping. Then, London. The London, and what this sessions is this is when the bank opens. So Australia's banks open at 6:30 a.m. and then all their money comes into the market. So that's going to create liquidity, which is basically resting orders for you guys to trade, and it's going to cause like basically more volume. And when it's low volume, you don't want to be trading it, because if you're in a long position and it's just consolidating, that's not good. But if you're trading London session and there's more volume, it's more likely for you to take profit to get hit. So the Asia's banks open whatever time. And you're gonna need to remember this to mark out on your chart. So maybe write this down. Then London session is gonna open 4:30 p.m. my time. And I'm only gonna trade this until the latest 6:30, because I don't wanna be going when it's just London session. I want that prime volume of liquidity, and that's that 2-hour window. And then down the bottom there's some traffic lights, and you can see it kind of drops off a little bit. It's still good, but after 2 hours, I'm trying to sit down and look at the charts for 2 hours straight, because I'm trading lower time frames. So back when I was trading the 30-minute time frame, I could take trades at like 2 p.m. because I'm just checking every 30 minutes, seeing what's happening. So, but that prime window, when both trading sessions overlap, that's the London session that I want to be trading although London session goes for longer, I want to be trading that because the Asians in the market and the Central Seas in the market, they're gonna bring together more liquidity. And then lastly, New York session, and this is a lot more important if you're trading indexes like the S&P 500, Bitcoin, stuff that's against the US dollar. And this is why I can't trade those pairs, because it starts at 9:30 p.m. my time. I'm already asleep by then. So if you're in Australia like me, you have to learn these and use them to your advantage, because when I started trading, I would just trade Asia session because it's the earliest. And I matched that up to the pairs I was trading, because you'll see I'm trading Euro USD and GBP USD. So GBP, that's going to get more volume London session, because that's the Great British Pound. But I was trading odd JPY like last year, probably maybe a year ago, because I was trading Asia session, which is Australia JPY. So I was getting more volume on there than if I was trading GU here. So you want to match it up, and that's what I had to do. And then I can't trade New York session. So yeah, even though I love watching TJR, he trades the S&P 500. That's just something that I don't want to do. And yeah, so write them openings down for your time zone. So go on Forex Pips, market out, or what's it called? Baby Pips, Forex market hours. And then one thing you have to remember, when daylight saving times come out, these change. So a couple months, last month, I was trading at 5:30 p.m. because daylight savings changed it. And then it's also on here. This is Forex Factory. It has the beginning times, 9 hours, 30 minutes. So yeah, that's the two websites I would use, because it just automatically converts the time. It's easy. Or whoops. Where'd that go? Alright. So yeah, now that you kind of learn the things, I think let's just jump right in, because that basically explained it. So I'm going to mark out 4:30 for London session, 9:30 a.m. and then 9:30 p.m. for, this is just random day. This is probably a Wednesday. This is a Wednesday, but this might not even have anything good on it. This is just a random day that I marked out. And we'll also mark out no, we'll just leave it like that. So we got New York session low right there. We got New York session high. So this is the whole of New York session. This is what the TJR called the Fat Americans. So I'll call them that because they are big in the markets also. So these are the big boy Americans. And then what happens here? Asia session opens. It sweeps this liquidity down here and goes up. And then, let's see, Asia session low doesn't reach New York high, so we'll keep that up for liquidity. It doesn't even get hit London, so they don't have to get swept, by the way. And then London, I wouldn't have traded it. No, wait, this is nearly New York session. So end of London or New York pre-market sweeps Asia high and goes down to Asia low and then goes back up. So what's happening here? What's happening is all the Asia people, all the Asians, they're trying to sweep out the big fat Americans, because they are going long here with their stop losses here. So when the Asians come in and they sweep that out, they're gathering all their stop losses to then try have a more voluminous session than they did, right? So they sweep that out and then they're going long here with their stop losses here. London session didn't do much today. And then the New York, the big fat Americans, they come in again, they want to sweep that liquidity, and then once the Asians, they get stopped out, they're like, okay, let's go short with stop loss at our highs, and then bang, they get stopped out again, and then all the liquidity is used to go down. Let's find a better example. Let's go on EU. Oh. Let's see. Random day. Tuesday, 28th April. Hopefully this is a good day. Okay. Couple sessions marked out. Let's see. Alright, so New York high did not get swept. But New York low did. So we have New York low here. The Asians, they come in and they sweep out all the Americans that were in long. And then, this is getting into another thing. When I see a fair value gap below these lows, that's showing that it's getting disrespected. So the Asians, they don't actually want to go long. They want to continue this downtrend. So they can use all that liquidity that was there to go down. How could they use that? If the stop loss was there, they buy. So yeah, when a stop loss gets swept, right? Stop loss gets swept. When a stop loss gets swept, that's basically in a buy position. You have to have someone willing to. So when your stop loss gets hit in a buy position, you're basically selling the rest of your position. So you bought a cookie, and then you want to sell the rest of that cookie because you thought that cookie was going to multiply into 2, but you realize it's not. So you want to sell it. But to be able to sell something, you need to have someone willing to buy it. So then, when a stop loss gets hit, that creates, if all the stop losses are here, a lot of people, they end up, even though it's a stop loss, they end up having to buy the cookies. So everyone's buying all the cookies from the Americans, and then that can create up moves. And then vice versa for a high. You wanna, let's go right there, bang. Stop loss at a high. You sold a cookie, but then you wanna buy it back because you think it's going. Why would you want to buy it back if it's going down? You want to buy it back because you're hungry. So you've already sold the cookie, and then when you buy it back, you need to have someone willing to sell it to you. So then all the people trying to buy cookies right here, at this area right here, they need to have lots of people willing to sell it to them. And that's the Asians. So then, when they sell the Americans sell their cookies because they're overweight, that's gonna cause prices to go down. Whew. I'm glad I'm doing this concepts course, because this is, even if it gets no views, this is teaching me about the markets, because to be able to fully understand something, you need to be willing to teach it, which I explained in the first couple episodes. But yeah, I just want to show you that this really does work. Geez, we're having some slow London sessions these times. Wait, why did I mark out 18:30, bro? It's 16:30. Okay, it's 4:30. So for this one, I would kind of mark out Asia low as here, Asia high obviously there. And then, how would I take a trade off this without seeing the higher time frame? We got a fair value gap below the low pre-market. Yeah, pre-market formed the fair value gap. So, went short, and then London actually went up. London is not looking too good at the moment. Let's see. London here. Yeah, bro, the Central Seas ain't looking too good. Well, let's see, we got Asia high here. And then when the Central Seas come in and they form a fair value gap above that, bang, we come into that. And then, so yeah, it took out all the people going, all the Asians going short off this move. They sold them a bunch of cookies so that they could get out of their positions. But wait, maybe when highs get disrespected, it's because their TP already got hit. Yo. Hold up. I don't know. Yeah, this is gonna help me like fully understand this, because I just wait for a fair value gap and then it goes up. But yeah, let's see. London high, New York buys all the cookies, or sells them all the cookies, price goes down. So combining this with other confluences is basically how I form my strategy. And this is, I've got to show this on other pairs, boys. Come on, let's see. The S&P 500. This is not what I trade, so this may not even work at all. Let's see. New York session is the one to trade here, so we'll look at that. And yeah, London session, I'm marking out both Asia and New York highs highs and lows if they haven't been swept. So let's see. All right, New York session, swept these highs, closed above them, so then go higher. Maybe because these sellers already hit their take profit. Damn, bro. That's actually, might be a little, might have just found something out, boys. Anyways, what I challenge you guys to do is go on your charts and try to look for, firstly, go to Baby Pips and find out your market openings, and then mark them out on your charts, whatever you're trading, connect them, see what sessions are best to trade for you and your time zone, your strategy, because everyone's going to be different. And then try and mark out those highs and lows and see how the liquidity is working. For some homework, yeah, that's it. I'll catch you guys for episode 5.